Okay, hi there. In this industry profile video, we're going to take a look for a few minutes at the private purpose-built student accommodation market. Now, this is an industry, a sector that has grown rapidly in recent years with booming investment both before and since the pandemic. But with operating costs going up, what will happen to businesses building and operating private rental properties for students? And also critically, what are the consequences of high inflation in rents on students, both undergraduates and postgrads? And to what extent, if at all, should the government intervene in this market? No doubt the importance of the rental sector, both from the point of view of the universities themselves, but critically the students. The average UK student monthly expenses is the biggest expense is rent, typically about a half of monthly living costs, obviously much bigger in areas where rents are very expensive. In Scotland, actually, interestingly, the government have introduced their general rent cap, lasting from September 22 till at least March 23. So students staying in the likes of the St Halls at St Andrews or private rented housing will not see their rent increase during this time, a palliative perhaps during the cost of living crisis. A bit of background on the industry. So approximately 2.2 million full-time students studying at UK universities, a large percentage, growing percentage, come from overseas. About 1.6 million students have a demand for bed space. Obviously, a proportion live at home or find other forms of accommodation. By the way, that number of students is going up partly because of demographics. The UK's 18-year-old population is set to grow by 19% by 2030, which is going to be creating well over 150,000 undergraduate places at current participation rates. Demand for places, therefore, increasing both from domestic and external sources. The average rent is going up £7,000 in London, which is about 3/4 of the typical maximum student maintenance loan amount. About 6,400 in the average for the UK, but there are big regional variations. I've got a chart for that in a second or two. Private rents have been going up quickly. We'll use a bit of supply and demand analysis in a second to explain that. And the national student-to-bed ratio is 2.39 to 1. That's gone up since 2019. And that really is a sign of the shortage, the structural supply shortage in the market, despite the entry of new players, new providers, private sector builders and service providers. And two of them are the Unite Group and UPP. I'll show you who are the main private sector suppliers in the sector. There has been a shift. Universities, as this chart shows, comparing 2013 with 2021-22, universities are struggling to build enough accommodation to meet the needs and the demands of students. So therefore, increasingly, as you can see by the chart there, private sector ownership is gathering a momentum. It's now overtaken the university provision. So purpose-built student accommodation is taking up most of the market. Now this is interesting. This is a sort of survey estimate of the weekly rent of student housing in the UK by location. Various university cities there you can see, ranging from Sheffield, the cheapest, just £124 per week on average, all the way through to Bristol, 174, so big variations there. And then London is in a different league, isn't it? An average of £238. Now, clearly that's an average. There'll be significant variations depending on the type of property and what's on offer and the quality of the accommodation. It's quite interesting to think from an economics perspective, isn't it, about why you might want to pause the video and think about why the rental cost will vary by city. It must obviously be a reflection in part of local supply and demand factors. Now, as I'll say something about the market structure. So together, the 10 leading purpose-built student accommodation providers account for about 250,000 beds in the UK. Unite, part of the Unite Group, Unite Students, heads the ranking. They've got about 74,000 beds, which is more than double the next one. So Unite is the big player in this market. Student Roost, Fresh Student Living, Hello Student and others. There's been actually quite a bit of merger and takeover activity in the industry, a bit of horizontal integration which might be worth thinking about. Say a little bit about Unite. So it is the biggest provider of student rental accommodation in the UK, and typically their pricing model, their business model, is they offer to students an all-inclusive fixed price for the year. That includes utilities, Wi-Fi, contents insurance, and so on and so forth. They have a strong presence in the UK sector. They're probably generating about £7 million of rental income a week, and they are profitable after operating costs. Their profit before tax in 2022 was £163 million. So this is a highly profitable industry, supernormal profits being made. In many ways, the student rental sector is defying gravity in terms of the wider commercial property sector. And you might want to think about the consequences of high levels of profit. Does that encourage new firms to try to enter the market? From a sustainability point of view, they're aiming to be net zero carbon by 2030. Their shares are now listed on the stock market. Indeed, the Unite Group recently entered the FTSE 100. That's the 100 leading companies in the UK measured by market capitalisation. Interestingly, I found out that the Unite Group is a real living wage employer. That's a voluntary wage paid above the national minimum wage. And they've created a foundation which allocates 1% of their profits. They also have partnerships with discount supermarkets such as Aldi and Lidl to provide food for students facing cost of living problems. So the big issue, I suppose, is that there is just a chronic shortage of student accommodation, and it's been in the news. These are a couple of headlines: UK student housing reaching crisis point. Just the lack of the supply of housing just has failed to keep pace. There is a structural supply shortfall, and as a result, thousands of university students arriving at university last year, and no doubt this year, may face starting their courses without being able to move into a hall of residence, and therefore having to find their own rooms in the private sector, or perhaps even study from home. Things are starting to change. Of course, we've had low inflation for recent times, but now there is a significant increase in inflation, much of which is cost push, and this is affecting this sector as well. So if we think about the cost of landlords and businesses such as Unite providing private sector rental housing, think of all the costs that are going up: the energy costs, staff costs, food and consumables, increased council charges for waste collection, tougher energy efficiency targets imposed on landlords, and critically, of course, the increased interest rate on loans. And what I would do here, I'd be thinking about the difference between the change in variable costs for a business such as Unite and an increase in fixed costs, which of course is the interest on loans. Why are rent prices going up? Well, you might want to think about using simple supply and demand analysis. Don't forget that prices for student rents are not regulated in the UK, so the market, in a sense, can set its own rent, and students are free to accept or reject it. Here's the demand curve. Let's assume that demand curve shifts out. We're told that there's more students entering the sector. I've drawn the supply curve as fairly inelastic, and we'll talk about that in a second. So therefore, if the demand shifts out and supply is inelastic, then you get a big movement in price towards the new equilibrium. So the rent goes up from R1 at quantity Q1 to R2 at quantity Q2. So when you have a big rise in demand allied with an inelastic supply, that's one reason, of course, why rents have gone up. Another factor is that the supply may have fallen. There's some evidence, by the way, that some private sector landlords, often those who provide housing for multiple occupancy, 3 or 4 people living in a house as students, they've chosen to leave the market in response to rising costs and increasing regulation. And they may well be able to get a better return by putting their properties on the Airbnb market. So if supply shifts from S1 to S2, again, that drives the price up, doesn't it, to R3 with perhaps a lower quantity. So there are several forces here at work driving up the cost of student renting. It is becoming a major policy, economic, as well as a social issue. So I just thought I'd finish with just trying to think about 10 little revision questions that you might want to have a think about yourself, or your teacher might want to go through with you, if we use the private rental sector as a little exam case study. First of all, what factors do you think affect the market demand? What factors affect both the willingness and the ability to pay for rental accommodation? A related point, Examine the factors that influence the price elasticity of demand. So if Unite Group is facing rising costs, to what extent are they able to pass on those costs in higher rental inflation to students? What factors affect market supply in the UK? And critically again, and this can often come up in an exam, examine the factors that influence the price elasticity of supply for new rental housing. There are more students wanting to study in the UK that need beds. Why might the price elasticity of supply be fairly low? Using supply and demand analysis, explain why rental charges are rising. I think we've covered that quite nicely. Using cost and revenue curve diagrams, examine factors that might cause a change in the profitability of construction firms in the rental sector. So why might the profits of the Unite Group, for example, rise or fall, shifting revenue and costs? Thinking about big businesses in the sector, what economies of scale might a business such as Unite have? What might be some of the benefits of horizontal integration, for example? And the really interesting bit of economics is, why do student rent prices differ between regions, towns and cities? Given that the accommodation might be fairly uniform in quality, is there a degree of price discrimination going on, or are there other factors at work? And two more questions. I think these are really quite important ones, something you might want to think about. Could you identify potential causes of market failure in the student rental housing sector? And related to that, to what extent, if at all, should the government intervene to make renting more affordable? Are there interventions that the UK government or the English government might choose to make if they think that the high rents, for example, are really, really damaging the education prospects of, let's say, students on low incomes, or affecting the flow of international students coming into the country? So loads of questions there that you might think about when you take this little market case study. I hope you found it useful. Loads more industry profiles on the way. If you have found it useful, then I would love it if you give me a like and maybe think about subscribing to the channel. But for now, take care, stay safe, stay happy, stay curious, and see you sometime soon.